We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold and
Good morning, everybody. Welcome back to another live stream. Thank you for being here. Dollar yen continues to push lower. Gold keeps going. Silver rebounding. I don't know if you guys saw silver yesterday. Silver was it's just an insane chart. Yesterday, silver was up at one point on the day, 13%. Like, what is going on? And then in the same day, gave all of it back and closed like pretty much where it started for the day. It's just insane moves happening right now in the metals market. Gold obviously also having an insane move here. But I got to say, silver's moves are just more insane. And I don't know, it's been one of those things where it's like, at some point, the metals markets will chill out, but it just doesn't feel like it's over. It just keeps, well, every day I think it's getting closer to over. It just shocks everybody and starts going again. The metals volatility is absolutely crazy here recently. And, there's just no, in my opinion, there's no way to time or call when this is all going to relax. If we're watching precious metals, you have silver trading at $111 an ounce. Also, let me just double check that my mic sounds okay. Should be okay. Let me know if I sound off or something. So silver exploding up to $117 an ounce, came all the way back down to 104, which is a crazy thing to think, where we come down to 104, and then pushing through, following through up to 111 here today. So silver is just unbelievable. I was, reading comments on silver. I'm not sure if you guys have ever watched content like this, but like gold and silver bullion shops and like silver dealers and like physical silver. There's all sorts of channels about, physical silver and stuff. And I've watched them for years. And it's part of the reason years ago I bought a bunch of, not a ton, but I bought some silver and like physical silver. And I was listening to somebody say they wanted to make, or they needed like $300. So they took in three or four of their silver ounces and sold them to a dealer. And I'm thinking, 3 coins this big, and you walked out with $300 or 3 or 4, I don't know, whatever. Because nowadays, right now, if you actually go to sell to a dealer, they won't give you 111. They'll give you like 92. The reason, and this is actually maybe something some of you guys may not be familiar with. It's actually kind of interesting. When you go to a silver or gold physical dealer, the prices that they will pay you for your silver or will sell you silver or gold are not necessarily the same. In fact, they're very rarely the exact same to what spot silver or paper silver, paper gold is trading at. And so what I mean by that is if you go in and sell your silver right now, there's like a whole crisis going on in the physical precious metals world. Let me explain. If you try to go sell your silver, let's say you have 1 ounce of silver and you're like, all right, I'm going to go cash this in. I'm going to go sell my ounce of silver. You go to sell that silver and you're like, okay, I'm going to get $111, right? No. The dealers right now, as far as I understand, are paying like 60 to 70% of spot price to pay you out. Which is, to some, they're like, what the heck? The dealers are ripping us off. But think about this. Imagine if you're a physical gold and silver shop right now and everybody's rushing in to sell you silver and gold. Because a lot of people have been sitting on gold and silver for years and years and years. And now that it's gone running up, a lot of the physical gold and silver dealers are flooded with inventory. Everybody wants to sell them their gold and silver because they're cashing in on this thing they've held for 5 years, 10 years, 15, 20 years. Anyways, there's also buyers too, but a lot of the stacker world is taking some profits. And anyways, they're only offering you 60, 70%. Why is that? Well, because everyone is selling and there's so much silver coming onto the market. And at the same time, dealers who buy it from you, they have to sit there and hold that physical silver. And it's not like the markets, the digital markets where you can hit sell and it's gone. If you're a physical dealer and you buy 10,000 ounces of silver over the next month, and then the price of silver collapses, what happens to your business? It's not good. So it's a real world example of what are they paying for your silver? 60 to 70% of your silver, or of the actual spot price. And so it's this whole drama. It's kind of interesting because people are like, the dealers are ripping us off. And it's like, I don't know. If you were a dealer and if you had people flooding your doors to sell you silver at the highest prices, wouldn't you also want a little bit of cushion to protect yourself from a huge drop? I mean, this thing is moving dramatically up, but it could also start moving dramatically down. Anyways, I just thought that was an interesting little thing to talk about because it's kind of the real world market of silver right now. You can go, I believe, I haven't tried or tested this, but from what I see online, there's people who, or you can go into dealers and they'll actually sell you silver. They want to get rid of it so bad. Dealers want to get rid of it so bad because they are sitting on such supply. Everyone's selling them silver that they'll sell it to you at 100 or lower than spot price, just to move their inventory and raise cash. Not necessarily saying like, oh, there's a heavy interest in selling silver. I mean, I think there is on the local level. There's a lot of people, it seems like, that are going out in physical market and selling their silver if they've had it for years, taking a profit. And who's to blame them? Things are expensive out there. If you sat on 1,000 ounces of silver for 15 years and it just went up by triple or quadruple or whatever from what you bought it at, hey, some people are just taking that as an opportunity to cash out. Anyways, moving to the paper market, the demand overall for silver, I don't think is necessarily letting up at all. The silver dealers, the physical dealers, is sort of different than the broad spot price of silver. There's like some frenzy buying and selling, or frenzy buying going on in the precious metals paper market world. I mean, gold is just in full-blown momentum force. I have trailed my stop loss. If we can get a solid close today, I am going to be looking at this 4-hour level. In fact, I may trail it sooner than that. We have a huge one-directional move on our hands. This thing has just been up, and away. And so we did yesterday, we got a pretty sharp intraday drop-off. Gold dropped by, doesn't look like that much, but we dropped intraday yesterday by 2.4% on gold. Pretty crazy. I mean, that's a 2% move. That's where, if you're watching precious metals, like, understand you are playing with fire here. I mean, me too. I'm long gold, but I'm telling you, we are playing with fire in the sense that volatility in precious metals is incredibly high. Very, very, very high relative to its usual moves. We're talking about some pretty insane moves here on gold. Anyways, I'm probably going to trail a stop loss on this one, continue to ride this trade, lock something further in on it. We did get a nice response from this area of support. In fact, I will be doing that today. We did get a nice little push right back to the all-time highs. We've got a nice area of support. We also have the gap area here. I like this. This actually looks really good. Check this out. So we gapped open Sunday night, right? Gapped open, and we went on gold to the upside, pulled back, filled that gap, and pushed off of it. So that tells me, okay, buyers firmed up right there at the gap. I don't want to see that structure change, right? And I love that we did that yesterday. Like, it's a weird thing. It's the weirdest thing in the world when I'm in a runner like this to actually kind of hope for, give me that like snap down, shoot back up kind of move, because it reaffirms like, all right, buyers are still in there, right? Buyers are stepping up, buying into the gap there, support held, etc. So we look good. So yeah, I will be trailing a stop loss further on this gold trade. I've also marked, I know it's really hard to see, but it's in like clear gray, the times that I had trailed stop prior to this. So this will be, my fifth or so time trailing a stop loss. Anyways, we'll see. We'll see where it wants to go next. The dollar index continues to be flooding lower here. Dollar bearishness is on the move. Check this out. Take a look here. Supply on the daily time frame. So basically, we had this area of support, 97.8. Once that broke, boom, down we went. Back down to 96.6 here. And that's the low end of this range that the dollar's been in for some time. So, and I think that what's actually kind of taking place is really visible on the dollar yen. The dollar yen just broke through another critical level of support. And I think that this is potentially the main part of this story. Like, I think part of this dollar weakness, or a big chunk of it, is potentially yen intervention. Take a look at JXY really quick, just to get an idea of the Japanese yen today. You can see the Japanese yen is following through to the upside here. You have a bit of shift in momentum. We have just straight yen selling, and we had the big gap up, or the big push up. And what's actually very interesting is you are seeing some follow through on the Japanese yen strength here. That tells me that there's a good chance that this is, some sort of rate check, some sort of push from the Bank of Japan to try and strengthen the yen a little bit. But we will see. I think you look at dollar yen, right, to the downside, really breaking structure there. We can also take a look at some other yen crosses, right? Euro yen, you can see other ones are holding up a little bit better. Euro yen is sitting at support, pound yen sitting at support, CAD yen kind of breaking to the downside, actually. CAD yen is not as strong as the others, leaving a little bit of a gap here. The Australian dollar, Japanese yen also pushing lower, but you can see how strong the Aussie is. Kiwi also, Swiss yen, nice and strong against the yen. Kind of interesting. It's the dollar yen really seeing some pressure here. I also think that we want to keep an eye on Bitcoin. It's been a really interesting canary in the coal mine in terms of the whole carry trade stuff. I think that if there is some bigger effort to offload, U.S. Treasuries, U.S. dollar, stocks, cryptos, etc., to buy the yen essentially from the Bank of Japan, if that is taking place, then what I think that materializes in is rips in risk assets getting faded, sell-offs in the yen getting supported, right? If there is sort of this effort from the Bank of Japan right now to strengthen the Japanese yen, where you will see that is rips getting sold into and money going into the Japanese yen, or strength coming into the yen. So I think that I've suspected that the last few days. I think that's kind of what is taking place. I think that's a big source of the dollar sell-off. That's my theory, at least for now. And so watch your cryptos, right? I think it's a good indicator of if you are getting, follow through movements like this. If you get a spike in, Bitcoin, let's say, for example, you get this type of move and it ends like this, right? Where you get like a big shoot up and then it gets faded into the day. To me, that's telling you, okay, risk assets are getting sold into on strength. And if you are having something where Bank of Japan is sitting there and they are just hitting the bid on yen, what that tells me is, a fade in risk assets is them kind of offloading, them selling, the carry trade kind of sensing out that, okay, the yen is potentially turning. I'm not like super bullish on the Japanese yen. I'm just saying I think that there is, we've been very, very oversold in the yen for a minute, for quite some time. You've had a lot of yen weakness. And so you are seeing a little bit of squeeze on that trade, I think, and I think it's worth keeping an eye on. Why are you long Nikkei if the yen might strengthen, which would make indices drop? It's a good question. So it's not the only thing that moves markets, the yen stuff, because you can see the S&P 500 is up on the day. But I do also think that it could keep things somewhat muted to the upside if that is really taking place. I don't necessarily think it's like, all right, everything's going to crash into oblivion. I'm just saying, like, okay, if there's that willingness to support the Japanese yen, it could continue to keep risk assets muted. You can see the Nikkei is up today. I like the Nikkei for a couple reasons. I'll take a look at the overall asset scorecard. Fiscal policy in Japan is very pro-growth. And so, I mean, I like the fiscal policy situation. I also like when we take a look here at our asset scorecard for Nikkei. Seasonality looks good in the month of January. COT data shows a lot of institutional interest in buying the Nikkei. And I think that's partially due to, a weaker yen, generally speaking, being sort of a supportive thing to exporters in Japan. So I do like that trade. Institutions are very long on it. They recently even bought more. Inflation data in the Japanese economy, 2.1%, PCE at 2.9%. So that data coming in a little soft may be less pressing for them to hike interest rates, which is, of course, supportive. So we'll keep an eye. Right now, it's got a +4 score, so it's lost a little bit of its bullishness. But you can see here recently on Edgefinder scoring, Nikkei's been really strong. And that's been a pretty decent call recently. I do have still, the potential for this to become a losing trade, sitting at about a 1-to-1 risk to reward situation. If we can see the Nikkei trade blow through the highs, if that does take place, I don't necessarily think it has to be on a weaker Japanese yen, right? It's not 1-to-1. Weak yen does not necessarily mean, Japanese stocks move up and vice versa. Now it's generally more supportive of a stronger Japanese stock market, but it's not 1-to-1, right? They're not, inversely perfectly tied. I'm not super bullish on the yen either. I just think that there's a little bit of a squeeze taking place right now, and that we went from kind of extremely oversold on the yen to getting a little bit of a bounce. Japanese yen, if you're a bear on it, maybe you're starting to get a little overextended the other direction. We'll have to keep an eye. What do you guys think? We just did a whole yen breakdown here. Give me a 1 in the comment section or the chat section if you are bullish on the yen, and give me a 2 if you are bearish. Let me know. What do you guys think about the yen? Is the yen going to have a bigger push up, or is this something to fade? Let me know. 1 for bullish, 2 for bearish. Taking a look at the U.S. stock market, we are sitting still just shy of all-time highs. Seeing a lot of 1s and 2s, so we got a little mixed audience here. That's what makes a market. You've got resistance overhead for the S&P 500. I'm still pretty neutral on U.S. stocks. I've been neutral for a little while now. If I take a look at S&P 500, you can see we went from having pretty strong bullish scores end of year last year with strong seasonality in the fourth quarter. We've really dried up in score here on Edgefinder back into neutral territory for the S&P 500. So I'm not looking to engage a bunch of new trades on the index. Some of the more difficult components here for me with the S&P 500, inflation is still remaining somewhat sticky, which I think puts caps on rate cuts. So I'd love to see inflation come down, cool off more than expected. The jobs market's also something that I think we can't completely ignore. I don't think the jobs market's not in like devastation mode, but it certainly, leaves some to be desired in terms of strength. The jobs market, we had unemployment rate still at 4.4. This is really solid overall unemployment rate. Weekly jobless claims, we'll get new data on Thursday, but generally recently came in better than expected. And unemployment claims have actually been a positive side of the US jobs market. If we take a look at that, let's take a closer look at economic data, jobs market data. We'll go unemployment claims. I mean, you've got a nice trend forming here in unemployment claims. Unemployment claims have actually been dropping, and that is really good. That's a check mark for the jobs market. It's like, okay, less people filing unemployment. We're at 263,000 weekly jobless claims, 200K. Like, that's an improvement. So it's not devastating by any means. Now, job openings in the US, if we take a look here, last 3 years, not particularly great to see that continuing to trend lower. We do want to see job openings bottom out and start to move higher, but we just don't quite have that. At the same time, you also have hiring. If we take a look at the NFP report, let's just zoom out here a couple years back, and you can see it's been generally in decline as well. So again, decline, let's be very clear. Let's make sure we're reading this the right way. We are still seeing jobs add to the US economy. We're just seeing less jobs added over time in the US economy. That has been trending down for a couple years now. Okay. So that tells me the jobs market is just not like super strong. It's telling us that the jobs market is gradually cooling really since like 2022. Like, let's see, can we go that far back? Let's go 2022. Yeah, we can. Yeah, so 2022 till now, we have seen the jobs market continue to cool off. And so that's not like something to like ring the alarm bell for me, but it's certainly not a good thing either, right? To have the jobs market cooling off. Especially since, the current administration's goal is to try to boom the economy, to get jobs back out into the streets like crazy, to spur growth, to win the AI race, like the space race and the whatever back in the 60s, 70s, 80s, the whole Cold War post era, all that time, right? The idea is like boom growth in order to win the race. And I think that there is some need for that in the AI, world. I think that the US needs to win the AI race in order to stay on top. Anyways, for that to happen, you want to see the jobs market. I think that's kind of your scorecard. It's the jobs market starting to turn around from the last few years and start to trend higher. Unemployment rate is still ultimately not in a terrible spot. 4.4% is pretty low unemployment rate. That has been, if we go take a look the last 4 years, let's see if we can. Yeah. So we had unemployment rate come down. 2023 started going up. This is, I know this chart looks kind of scary, but it's very low in terms of long-term US averages. How far back can we go? I just want to see. Oh, look at that. We got some data. Go back to 2017. Look at that. So you can see like 2017, 2018, unemployment hit like all-time lows in the US, like 3.5% February of 2020. And then along came the pandemic to just break this chart in half. And we shot up dramatically, right? Then we've cooled off post-pandemic. We were improving, and now we're back on the rise here a little bit. So anyways, something to think about. Is there a fundamental reason? Why do you think the jobs market is cooling? Is there a fundamental reason? Yeah, I mean, I think that the higher interest rates have taken a toll to some extent. When you have higher interest rates, what that inevitably does is it dries up access to capital, right? And so it makes it harder for businesses and consumers to borrow money. And when money is flowing a little bit less, it can cause businesses to choose to not hire as much, right? So I don't know, it's an interesting, unemployment is not like, we have to also make sure that we're understanding where we're at with unemployment in the United States is not critical. 4.4%. We are not, it's not like if that were to spike dramatically up to 7, 8, 9, 10%, yeah, that's scary. But at 4.4%, I'd say that the state of the jobs market is we are steadily cooling down. Not something we necessarily want. We don't want the jobs market. I mean, people who want rate cuts do, but we want the jobs market to start bottoming out and start turning up. So we'll see if it happens. Anyways, let's see. What do we have? Gold up 1.13%. Silver's up 5%. Insane moves. Like, that's almost normal nowadays to get these types of moves in gold and silver. Years ago, you did not see. Like, let's just go back in time really quick. Like, that's a day. That's like a 1% move lower in silver. There's like a 1% move. There's like a 0.12% move. And now you're talking about days upon days where we're getting 5-10% swings in silver. Anyways, taking a look at the NASDAQ. NASDAQ is also making a push, trying to break through this level of resistance. Let's see what happens here. If you're taking a look at this on a more intraday, take a look at the 4-hour, 1-hour chart. We're trying to break through here. U.S. stock market opens up in 3 minutes. We'll see how that all plays out. By the way, if you want to try out the Edge Finder, I've been playing around with it quite a bit here in today's stream. It's a great way. At the end of the day, one of the reasons, actually the first reason that I built Edge Finder, that I started, working on this project like 5 years ago at this point, was because I wanted to, for these streams, be able to have a presentation already made for me all the time in terms of economic data, as well as commitment of traders data. I wanted to be able to look at sentiment all in one place. And so when I first built the Edge Finder, it wasn't the Edge Finder initially was not something I was planning on selling to people. Now, of course, it has become a really popular selling product for us over time, but it started out as just something I wanted to use for my videos to have content, ready for me to make and discuss these topics. So if you want a copy of the Edge Finder yourself, if you'd like to try it out, if you'd like to learn some more information, we also have a free course on how to trade with Edge Finder, how to use this stuff to find better trades. That is free access if you want to try out the course. So we'll drop a link here in the live stream chat to where you can sign up to try out the Edge Finder as well as get the free Edge Finder course. We'll drop that here in the chat, and then you can fill out that form and get yourself access to it. So if we take a look here, let's see where we're at. Hold on. There we go. Oil's also up 0.5%. Here it is. Boom. Edge Finder trial if you want information. By the way, so when you fill out the Edge Finder trial form, it will also immediately send you access to our free Edge Finder course. So we put together, even if you never end up buying the Edge Finder course, you 100% should read, I'm sorry, not buy the Edge Finder course. Even if you don't ever end up buying the Edge Finder, fill out that form, get the Edge Finder free course. It will give you some very high level macroeconomic understanding on how we built the tool to scan this stuff to help find trades. When you look at the top setups page, what it's doing, if we cut to the chase, is it looks at technical reads, sentiment reads, economic growth and consumer strength data, inflation statistics, and jobs market data. It's monitoring all those things, and it's ranking them, scoring them, and generating a watch list. So if I'm looking at this, my day-to-day watch list is I come in here, and I like to remove the neutral readings from the list. And this is my list of things with biases attached to them based on economic data, inflation, jobs data, crowd sentiment, institutional money movements, technical reads, etc. All automatically done. The tagline, I guess, for Edge Finder is fundamental analysis automated. It really automates a huge chunk of data and generates a report on it. That's the utility of it. Anyways, so if I'm looking at this, couple things that I'm watching, I do actually think that there is some potential dip buying opportunities on some of the yen crosses, but I'd be selective there because I don't necessarily love the idea of buying dollar yen. I think you very well could be jumping in front of a freight train there because I think there might be some sell US treasuries, buy Japanese yen going on right now. And so timing that bottom is very tricky. To be fair, if they're buying the yen, that also could take place in other places. But I just think that, the setup on something like NZD JPY or pound yen, Aussie yen looks a little bit more attractive. We're getting a lot of currency pairs here recently, and I've been very Forex heavy in terms of my analysis recently, which, hey, I'm all for it. I go from watching gold obsessively to indices to the dollar. I kind of move with what the fundamentals are telling me, and that's why my watch list is sort of always changing. US dollar is getting a bearish rating in terms of recent economic data. I want to show you guys something. So if we go to our new tool here, macro scanner, and I'm going to go economic surprise index, the US dollar is not in any sort of like devastating economic data here recently, though we do have stuff coming up, right? So as you have the next CPI report and the next NFP report, we'll have to see if the US dollar loses any score there. But it's still, despite having a 64% reading, is still lower than some of the other currencies. Like NZD has been just on fire here recently, reporting much stronger than expected data. Australia, the Japanese yen, the euro, these other places have been coming in with some pretty rock star expectation beats, right? This is different. Like, last thing I'll say, and then we got to pass the show over to Alan. The economic surprise index is not necessarily this is the better economy or this is the better economy. It's telling you a short-term fundamental indicator based on recent economic data surprises. The economic surprise index basically looks at a collection of data coming out recently versus forecasts. If CPI and NFP and unemployment rate, if they are beating expectations, that country's currency is going to get a stronger reading. And that's more of a short-term fundamental-based indicator. For those of you guys who are more longer term, I would encourage you to explore the economic strength index. This is part 2 to this. This is a long-term fundamental ranking indicator based on the latest available data for select currencies. This is looking at the absolute GDP growth rather than GDP growth versus forecast, right? Which is what the surprise index studies. This is just looking at which countries have the strongest GDP growth overall, which right now that would be the US. So the US has the strongest relative strength score. So I think it's accurate to say between these two, Edgefinder is more bearish US dollar right now. In the here and the now, in the trading land, dollar looks bearish on Edgefinder. In a longer term position trading fashion, dollar actually is starting to look more attractive. So as you get these lower prices, the longer term side of me is like, keep going, just melt through these lows. Give me that longer term low where I think that the dollar could actually be a better buy than sell. I've seen a lot of people referencing like this long term trend line being tested right now. So we'll see. That's a monthly time frame, by the way. So anyways, with that said, 2 different readings. Like the dollar could be, this reading could be right, and so could the surprise index. Like surprise index could say dollar bearishness for the next month, and then the strength index could tell you dollar bullishness over the next 2 years, right? So something to think about. Anyways, up next, we have Alan coming on, Alan Perez, going to be sharing some of his thoughts and ideas. He is Forex heavy as well, which I think will be great for this audience, especially since Forex is becoming more interesting here today. By the way, during the break, some of you guys may be wondering the best Forex brokerage for US traders. So during this break here between Alan and I, we'll play a quick clip on our favorite brokerage in terms of US traders trading on a regulated US foreign exchange brokerage. Of course, non-US people can also explore them as well. So check it out. Up next, Alan Perez.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, everyone. Good afternoon, wherever you guys are watching. Hope you guys are having a lovely day. We are getting a lot of movement, like Nick mentioned here, on currencies, right? Forex is really starting to move here. I was wrong on the initial move, but now the move is starting to be a lot more obvious now. And it seems like we're getting a very clear, very obvious rotation, not just in equities like we did, tech into the broader market, but now we're starting to see a lot of rotation in Forex, and you're starting to see this a lot with the US dollar. This is a monthly time frame here. This is a very big level that I'm watching here. And the cool thing is, these levels, when it comes to Forex world, whenever you get to these very extreme levels, they ultimately end up ranging and mean reverting right back to the other end of the channel here. And so perhaps we can get that. Now, there could be some other levels, more down below here, but this is the current one. And if we go ahead and break this level here on the DXY, then there is a good chance that we just flush lower with some continuation, maybe to that 96, 95.5, and that famous 95 handle that we're all talking about here. But yeah, like you're looking at a dollar Swiss here. One thing that I have, if the dollar does have like a very extreme flush out, I would be very happy, very willing to buy the dollar Swiss at this alarm here that I have at the 7,200 level, all the way down here. We got here before once, and then we had a quick snapback, and then ultimately we ended up trading higher all the way up within here. So that's actually something I'm really hopeful for. There's a catalyst that could send that, sooner than later. We do have the Fed. There's two outcomes to that. The U.S. economy is actually not doing too bad. I'll go ahead and pull up the actual economic heat map here, but you can see here the top setups page, like New Zealand dollar, pound dollar, euro dollar. A lot of people are flooding into those for that rotation, and dollar's actually getting a little bit of a hit. Dollar yen's also taking the lead there, but we'll go to the economic heat map here for the U.S. Not too bad, right? You have growth doing okay. Like if you just look at the right here, the summary, 63%, the meters in the blue here, it's not bad, right? So the underlying fundamental outlook for the US is pretty strong. You just have these catalysts, these headwinds, these headlines that are really, having it not be that attractive at the moment. So if we do find our way down to that level, I'd be more than happy to go ahead and buy it. We do have the Fed coming up as well. So there's a lot of things going for it. We have unemployment rate tick down lower. We have, inflation kind of sticky here. GDP rebounded as well. And then you also have the Fed independence being somewhat challenged there. And this being, Powell's last moments here in the Fed as the chairman. Perhaps he does take a stance that goes ahead and protects that Fed independence. Maybe he just goes ahead and says, something slightly neutral to hawkish, saying that we're not moving rates or anything like that. We're going to be sticking to the data dependent approach, and maybe that can catch the dollar a slight bid. However, I think the bid will be not too long lasting, in my opinion. I think maybe we find our way up to here on the dollar Swiss, the dollar yen. I don't even know. The dollar yen's just falling like a rock. But if we just pull up the dollar index, which looks very similar to dollar Swiss, and we can somehow find our way back up into here, this 97 handle, or even just fill this gap, then you can fade that. But I think that the dollar bullishness will be short-lived in the short term. Whenever it comes to the actual long-term picture of the dollar, like I said, look at the heat map on the US. It's looking pretty healthy here. Real yield heat map. Oh, wow. Is this brand new? I thought Nick switched it. Oh. Let's look at this one. Dollar at the very, very top when it comes to strength index here. This is longer term picture, but also real yield heat map. You can see that the dollar, what is this? Interest. Okay, so interest rates coming down with inflation staying elevated, so the yield gets more narrow. That's not good for the dollar. But this chart here, this longer term view, kind of shows the dollar comparing everyone else at the moment. And look at that. This is also interesting as well. Swiss was at the very bottom of the list last week. Now it's number 2. But ultimately, the dollar is going to be the one holding that real yield. You can also look at interest rate projections as well to illustrate that. I'll show you that one here. Interest rates data, interest rate projections. Dollar, the only one that's not going to be higher than the dollar is actually going to be the Aussie dollar. So go ahead and put the Aussie dollar on this chart here. Aussie dollar here in blue, that's going to be the higher one, but you can see that the US dollar and the pound is going to be somewhat the higher in the very long end, and so money tends to go ahead and flow into those currencies. Speaking of the Aussie dollar, you do have Aussie CPI coming up here tonight. And if you can see here, we're going to isolate just the Aussie and the US. Look at that. At the moment, US is a higher yielding currency. Aussie in blue, going into Q2 2026, that's the relationship's going to flip here. You can also see that here at the bottom as well, that line's going to cross over. And so you have Aussie CPI, right? It's expected to come in harder than expected. So that could definitely go ahead and lift off the Aussie. If we look at the top status page just to get a confirmation here, yes, Aussie dollar is getting a bullish reading as well. Now, technically speaking, it's going to be very hard to navigate, right? I'm ultimately wanting a pullback. I know the pullback approach has not been working out for me lately, but I still want to wait for a pullback. We might not get one, right? If I'm looking at, if you take a fit from low to high, that 38.2, the 50 to the 61.8, that's kind of what I'm looking for. But there's a good chance that you don't get that pullback, right? So if I go down to let's go to the monthly time frame on the Aussie dollar. This right here where we're at, we're actually breaking right above it right now as we speak. This is the level of resistance that I'm watching. So if you don't get a pullback opportunity, you might have to go the route of getting a break and retest and then buy on the retest here and then just trade it higher, right? At that point, target wise, I'm not sure how high it can go. If I'm just looking at this with a fresh pair of eyes, something like this, right? If we extend this higher, but you also want to cross reference like the DXY, the other major currencies as well, that are, to go ahead and take profits. Euro dollar here breaking out of this level as well. You have this EU India trade deal. Those two economies alone will make up a quarter of the GDP in the world. So that's a very strong relationship to have, very beneficial for the two countries. And the euro is also, obviously benefiting off of this. Maybe we get to that 1.2 handle. That's a very famous handle. And then you can kind of look for some range bound action. But if this, starts to play out for the long term here, and the U.S. continues to lose that lack of confidence, then you just have a longer or a weaker dollar for longer. So that's kind of what I'm eyeing for as well. Same thing with the EU, as long as the fundamentals and the current landscape stays in place. Pullbacks don't look to be happening here, so we might same approach as the Aussie dollar, break, retest. As far as the retests go, let's see where we can eye. Maybe this 38.2% retracement level, or just something, once we get back into the lower end of this channel here, this level, then I'll be looking to go ahead and buy if the fundamentals stay in line. Let's go ahead and look at the comments here just to see if I'm missing anything. Is Marco coming on? Yes, he's coming on. He's actually in the background here. There he is.
Hello.
How you doing, man?
Doing well. So we're getting more yen intervention news, and you're looking at, I think we are. So I saw on Financial Juice, I can bring it up.
Let's see.
Financial Juice. So market moving, suspected yen intervention. It was, I think, 4 hours ago. Oh, and then if you go to Forex, you're going to find some yen stuff here. So Japanese finance minister, we will continue to closely coordinate with the US. We are to take appropriate steps on FX. We will take action in line with US-Japan FX agreement. So looks like we're getting some developments. Now, again, no one really knows if this is an intervention. We don't know for sure, but it sure seems like a pretty big move. Apparently, this right here wasn't an intervention. So from the reading I've been doing, this big move lower, the BOJ did not participate, but they may be coming in right now. This may have been a BOJ intervention, and we may keep selling off a bit more. So what do you think about it?
Yeah, I agree with you. So I just see that of my financial juice as well. And you're right. The first move that we saw was not the Bank of Japan. It was actually, well, what they say, it came out of Reuters, but not confirmed or denied. But it was the Fed that was actually checking the rate as well. Basically, they were coordinating together, which is also an indication that they're working together, and the intervention is very, very much probable. So maybe this second hit is the intervention, Marco. I wouldn't doubt it. As we said before, they don't want to make an intervention and it be useless for the super strong dollar that's going to counteract that. So this is actually, it makes a lot of sense. As far as playing the dollar yen, tricky. I would look for the 150 handle. That would be my first attempt to go ahead and rebound here. But if we just look at history, this was the last intervention here in 2024. If you get that, it's 140s is a very probable thing. Very, very probable thing.
Yeah, that was a big one in 24. I was actually short on the Aussie yen, New Zealand yen, and Euro yen in 24, and those trades made my whole year basically. So
Really?
yeah, most of my percentage from that year came from I think it was the Aussie yen. So if we go to the daily Aussie JPY, it was such a massive sell-off.
It was, I remember. And it kind of trickled on, and then it came into the whole August 5th sell-off, the deleveraging. I was actually on the wrong end of that. I remember we spoke about that in the interview that you gave me. But that was a very painful moment for me. So I'm glad that you were able to benefit from that. But now, we all learn from our experiences, and you're starting to see similar characteristics, a lot of parallels between the two. And so yeah, let's talk about it, right? What happens if that is the yen intervention, and you just get this massive yen strength, right? Well, that's gonna be, if we just reference the past, deleveraging, it can trickle into other assets, right? Look at Bitcoin here. I keep seeing like on the news or like on social media, like it's above 90, now it's below 90. It's above 90, now it's below 90. Like it can very much well go ahead and have another leg lower, maybe 70, or maybe even break below. Do you think it'll be one of those like levels or one of those moments where there's another deleveraging event? Or do you think the market's pretty much aware of what's going to happen? You think the market learned from its past and they're going to approach it differently this time?
So, well, I think about the first move that happened with the sell-off was essentially the Fed did a rate check, and then the markets got pretty scared, and we got some very weak hands because people were expecting an intervention. Why else would the Fed do a rate check? So this was mostly not an intervention sell-off, but just a sell-off from weak hands. And now, if the BOJ actually follows through and crushes the price lower, we can actually go a lot lower. I mean, this weakness right here shows us that there's not a lot of buyers willing to hold these levels, and that it doesn't take much selling to push the price lower. So you were on the weekly chart, right?
Yes.
Yeah, on the weekly, I think more downside is definitely possible, but I don't want to place a bet on it. So I don't want to put a trade on. I don't want to sell. The initial idea was has already happened. So the initial idea was to sell somewhere around 160, and then for a price to move lower 3 to 4%, which is exactly what happened, around a 4% move so far. And that was kind of my edge that I wanted to play. From this point, I'm just not sure. It's anyone's guess. Will the BOJ step in more? Will they stay out? Will they see that the price is super weak and that there's no need to do an intervention? BOJ is super tricky. The hardest central bank to read, I would say, is the BOJ. First, because it's in Japanese, of course, so it's tough with the language barrier. But the second reason is they're sneaky. They want to play in the shadows. That's why I'm staying away from UJ at the moment, but I think the DXY weakness is going to continue. So it looks like we are actually going to get the 95 level. We're super close to it. If I just bring it up here.
So yeah, you actually make a great point, Marco. Like the BOJ, the reason why they're intervening, right, is to slow down speculation, right? And And if the actual thought or the idea of that already happening, right, they haven't confirmed nor denied the action. So let's say, for example, they didn't intervene. It seems like their job is partially done. So why even intervene, right? Maybe you save that ammo for another time if you have to, if it gets to that. And that's another thing that like we have to be tricky about, is because it may seem like the intervention is going to happen. And so, you go ahead and start shorting this thing, but maybe you just get a little rebound, right? Or maybe we do go ahead and chug lower, right? But we don't get the big downside that we think, 140, 150, right? That's the tricky part. And I agree with you there. And I'm sure a lot of people agree with that as well.
And so what do you think about the DXY?
DXY, I'm looking at this level right here.
Okay.
This is a weekly chart. This is where I'm looking at as far as DXY. I go down to the daily to make it easy on the eyes. We do have FOMC, right? We have a statement and all that good stuff here. So in my opinion, the fundamentals behind the US is okay. It's not crippling or anything like that. So I do think that the Fed does have an opportunity to go ahead and hold rates. You also have the Fed independence being challenged as well, and it being Powell's last moments. Perhaps he does take a stronger stance, right, against that, and says, look, we're going to be data dependent. Data shows that we're in a good spot. Don't need to move rates for now, right? I think 2 cuts are still on the table. You can't argue that. But I think that stance is what goes ahead and happens. That's just my speculation here. However, I think that the other things that are pressuring the US dollar are still prevalent. They're still around. So any bullishness in the DXY will be ultimately short-lived. So I do think that we're probably going to be flirting around this 96, 97 handle for a little bit.
Yeah, this is a very strong support level, but we just seem to be hammering lower. This is going to be interesting. So FOMC is tomorrow, if I'm not mistaken, which will give us a bit more clarity on the rate projection. I think if we go to the Fed Watch tool, we still have 2 rate cuts scheduled. So December, yeah, so 2 rate cuts, 25 basis points. This is the current rate. This is what is going to happen most likely by the end of 2026. It's going to be interesting what happens at this level. I would expect a definite reaction off of it. But again, we can just fly through it after we reject a bit. So a bit of a rejection, and then we fly through. And if the level breaks, more downside is absolutely possible. I don't think Powell is going to be super dovish. As you mentioned, there is no reason for him to be dovish. The US economy is still doing pretty well. That's why this move is a bit hard to understand. It's mostly kind of a sell American move, and not really a move based on fundamentals or the strength of the US. That's why I love the dollar Swiss long, because I thought that the fundamentals were going to catch up to the price sooner or later, but we just crushed through the level, and that's what happens sometimes.
Yeah, technical levels, they're only a guide, but they're not concrete, right? So they're good to take stabs at it and take an opportunity here and there, but ultimately the fundamentals is right now, like you said, sell America. There's a lot of skepticism and a lot of worries, rightfully so, and so that's why you're getting these big moves. How do you feel about dollar Swiss? I was talking about this earlier, buying it at this very extreme 7,200 level. Do you think we'll approach this level here, Marco, where we got this big wick last time?
I would love it. I would love to see it. I mean, I would for sure take a stab at it, especially with the positive swaps that go with the position. So if we actually crash all the way to 0.72, let me bring it up. I think that could be a nice opportunity. Would you place a sell limit, or would you wait for a initial sort of a reaction if we go through it and then kind of reject, or would you just have a sell limit, or sorry, a buy limit at I don't know, 711?
I'd have a buy limit.
Buy limit, yeah,
buy limit, and if there's a lot of follow through, then I'll just get stopped out right away. Hopefully, though, what I'm looking for is if I can get entered somewhere within the lower ends, and we have just one of these wick moments, that'd be the ideal situation. And then at that point, the trade is risk free, right? You can just move to break even or whatnot, trail a little bit, and that's going to be the ideal scenario. if you can get a strong wick similar to last time.
So like a huge wick just takes you in quickly, goes up or goes down. I think that's a smart move. So which level would trigger your buy limit for you to set the buy limit?
I'm gonna go for the 72 handle.
Okay.
You still have, if I measure this out, 140 pips from the very low of that last wick.
Yeah.
Again, so I want to give myself some room here to stomach, and there, maybe we don't even feel this whole move. That's why I'm kind of bumped up a little bit to 7,200. It's an even number. And sometimes this very well, like for example, dollar yen, we were eyeing 160. Sometimes it doesn't get to it. It'll you'll be off by a hair there. So I want to give myself time to go ahead and enter the move, but also give myself buffer in case we go a little bit lower.
Absolutely. I do like that trade idea. And what about the Aussie dollar?
Aussie dollar, I'm gonna ultimately wait for a pullback. It doesn't seem like that's gonna happen though, unfortunately. So I was looking for a pullback on this recent leg here, this leg higher. If it doesn't happen, okay, then I would probably wait for a pullback. So kind of a break and pullback. I want to wait for ultimately. I want to wait for Aussie CPI, right? It's projected to come in higher than expected, but it's not for certain, right? So waiting for that, and then also want to wait for the Fed and any forward guiding remarks that we can see. That way we can get a full picture and a full move, right? Maybe all stars are aligned where you have hot CPI and you have a neutral Fed. That's really good for Aussie dollar. That'll really send it higher. So, but I also want to see the reaction if we do get that neutral to hawkish Fed. I want to see what kind of a reprice do we see, right? Is it a super strong reprice in favor of the dollar, or is it a very short-lived one? That's one thing that I really need to see play out, because if you get a very short-lived one, then DXY would just continue on this downtrend. But if you get a really sharp follow through reprice on a neutral to hawkish Fed, and then you consider that the US fundamentals are not too bad, then maybe maybe this DXY floor that we're all looking at right here, right? Maybe this is it, right? So that's kind of what I have to look out for.
Yeah. I do love the Aussie dollar. Absolute favorite currency pair at the moment. But we're just not getting a pullback, which is a problem for my trade plan. But I may need to be more aggressive. So going to the daily chart, I'm with you. So expecting a hotter CPI print. If the BOJ actually does an intervention, the dollar will sell off even more, yet will catch a bid. That should be bullish for AU, because the dollar will lose more value. So all of the confluences are bullish AU. And I know it's a bit of a crowded position. So if you look at positioning, it's kind of crowded, but crowded positions can sometimes work if they have multiple confluences going in their favor. And gold is flying, silver is flying, which is at the end of the day bullish on the Aussie dollar. Only sort of a problem that I see is this high, but we have broken it now. We had a minimal reaction, broken through it, and if this daily candle closes above it, I think it's just gonna continue going higher as well.
Yeah,
so game plan for me, sorry.
No, go ahead.
Just game plan for me, looking for pullbacks. Will I get a pullback? I don't know. It's the same thing as with gold, just very far away from that 20 MA. I would love a pullback, but will it happen before the big crash happens? We're gonna see. Definitely worth a shot if it pulls back, and I don't mean like a huge daily candle, but maybe a bit of a slower correction. I think it's worth a shot getting in on gold, and especially on the Aussie dollar. So would you do that? Let's say wait for the 20 MA to catch up a bit.
Like I don't know, because at that point, then you have the risk of like the fundamentals kind of changing up a little bit. I think, like you kind of mentioned, being slightly more aggressive on the pullbacks, right? Maybe not waiting for a full 61.8 or something like that, but being slightly more aggressive will be the play. You mentioned something about the crowded trade, and I wanted to bring this up here. Aussie dollar is actually getting a very, very crowded short positioning. So this is Aussie dollar here. And rightfully so. Like, if most retail traders, they like to short highs and short tops or whatever, and hope that it kind of retraces there. But you're seeing here 83% of the retail crowd is long Aussie dollar, and you're up against this level of resistance, and it's breaking out here a little bit as well. So, like, if this thing could really have some follow through, especially if traders are starting to liquidate or just cover their positions and get out of it. Like, yeah, that's a fantastic way. And for those not knowing or that are new to this is the retail sentiment. So you can actually see retail positionings on gold, for example. Like right now, a lot of people are buying gold right now, 92% of the crowd. And to Marco's point, it can be that way, but the fundamentals are also in line with that. So it makes a lot of sense. But then you look at something like Aussie dollar, right? That's just shooting higher. The fundamentals are perfectly in line with that. And the retail crowd is getting absolutely smoked. So definitely go ahead and pick up yourself an Edge Finder. A lot of great tools here for you guys. I use it on a daily basis. It makes it super easy to go ahead and look at all the data points. Marco would agree. I used to work at a big firm and I was very spoiled with data. So if institutions don't have to do everything by hand, neither should you. So that's what I always say. And also to the Telegram channel, free value, of course. I stumped you guys yesterday. So the people that were that took the quiz, a lot of you guys got it wrong, 64%. So that's something that I like to see. So definitely join the Telegram channel. Lots of free articles on there and then some quizzes to keep you guys sharp. But Marco, I do have to head out. I have a dentist appointment here shortly, so I have to
no worries.
For that. But have a blessed rest of your day, guys. And also, Marco does drop a lot of giveaways here. I think you have a DNA challenge coming up.
Not today, unfortunately.
Oh, not today. Oh man,
not today, but
stick around
next
nonetheless.
Week, most likely.
Nonetheless, yeah, he has them on his pocket all the time. So stick around for Marco, and you have a blessed rest of your day, man.
Thank you, Alan, and see you soon. Yep.
Alrighty.
See you. Goodbye. So time for my solo segment. Yes, today, unfortunately, I don't have any DNA challenges to give away, but we're going to get some more codes in a week or 2 weeks. We're working with DNA, so it's going to happen. Stick to the streams, keep watching, because we're going to get more codes and we're going to give away more codes, but today we don't have anything. As far as DNA goes, we do have the discount code that's always running. That is, just to remind you, so A1 live gets you 25% off any DNA funded challenge. Okay, so A1 live always works, and with the code you actually get the most competitive price out there when it comes to reliable prop firms. I'm not talking about the scam firms that have 80-90% discounts. I'm talking about the real reputable companies. So continuing with my segment, let's take a look at the comments. Okay, we have quite a lot of comments. We're gonna see if there's something interesting, but quick watch list run through. So I have the Nikkei. That trade was opened yesterday. I think I mentioned it. Maybe I did, maybe I didn't. I'm not sure if I took it in the afternoon or not. Anyways, this is my new position, running around break even at the moment. The intervention would not help. So if we get an intervention on USD JPY, like a clear, huge intervention, it won't help my Nikkei position, but I still believe that this was a good level to get in. 20 MA is respecting the price. If we go to the Edge Finder, go to Nikkei, neutral reading right now, but if we go to the history, I think yesterday it was bullish. So Nikkei. By the way, the history option is great if you want to do some backtesting. See, yesterday we got a bullish reading. What has changed? Let me take a look at that. If you click on the symbol, you're going to get more information. Let's see what happened here. So the delta is -5. The retail sentiment dropped. The trend reading dropped as well because I'm guessing we broke a key moving average. But I'm not so worried about the retail sentiment. I'm not so worried about the trend. I'm more looking at the fundamental data, which still looks pretty healthy, still looks pretty well. Still like this position. At one point, it was running some okay percentage. Main thesis behind this position is, of course, the edge finder, the technical analysis, the fundamentals. But we have the sell America narrative. Now, if you compare the Nikkei to the S&P, Nikkei was much better in 2025 than the S&P. What do I mean? Well, if you put January 2025 at the beginning here, like this, you click the plus button and you go to the S&P, same percentage scale, S&P is up so far plus 15.26, Nikkei is up 34.2. If you click one more and we find the DAX index, you're going to see the DAX also outperformed the S&P. If we go to, let's say, gold. Oh, we click the plus button. Gold. Look at gold. So pretty much on this chart, what you can notice, the S&P is at the lowest point. So the S&P has not done well in the last year. Definite capital flight out of the States, out of the dollar, into some other stuff, diversification around the place, and that is something that should help the Nikkei in 2026. So my game plan is to focus on the Nikkei, look at the edge finder, buy the dips. Look at how clean the Nikkei respects the 20 MA, and past events make future trends. So if the Nikkei has been respecting the 20 MA perfectly, most likely it's going to happen again. It's going to continue happening, and the game plan would be to just trail my stop loss. So love this. What I don't like is S&P is pretty close to the all-time highs. I can't complain, but the NAS is kind of flat. So let's move this a bit higher. The NAS is something that I do like, but it just looks flat. We cannot seem to go back into this clean uptrend. We are starting to break out of this resistance level. Looks like there is an attempt today, so we will see what will happen. What is probably helping is the general weakness of the DXY. So as the DXY keeps dropping, losing value, everything that is paired against the dollar is going to gain value. That's just how things work. Gold is just trucking higher. What's interesting on silver, though, we have a massive, huge wick on the top, double wicks right now. So is a correction coming on silver? This wick is absolutely huge. This move was when I anticipated the correction. This was on the 29th of December, but this wick is even bigger. And now we have double wicks. So it looks like the buyers just cannot continue for much longer. This looks pretty good. I'm not going to go short, or not going to go short at the moment. Maybe I change my mind, but I don't want to play this market because anything that happens here can be explosive. So we can see some crazy stuff happen, some crazy moves. Once we finally do get a pullback, if we do some fibs, I don't know. The fibs are never perfect, but they are just a nice tool to see. We can go to 0.5, 0.618. That can happen for sure. That would be, let's say, a 20-30% correction. So I'm not looking to play this market, but I am looking to still get in on gold. If gold corrects in a controlled fashion, I mean, what's controlled? Well, if we get a bit of a slower pullback, then I think that should be pretty good. Okay? Let me just check the schedule. By the way, if you want to know when I will be streaming, you can of course go to the A1 live stream schedule. Okay. So tomorrow I'll be on, for example, at 10:15 Eastern Standard Time because we have the Fed. So if you go to the calendar, you will notice that we have the federal funds rate, FOMC statement, FOMC press conference. So that is what's happening tomorrow. Pretty big event. As far as the other news goes, I'm looking at the Aussie CPI. I'm looking at the BOC monetary policy rate statement. Although I'm not playing the CAD. I don't really have a clear edge on the CAD. Let me just see the economic heat map for Canada. Okay, kind of bullish, kind of. I just don't see a massive edge in playing the CAD. Let's see the CAD yen. What has that been doing? If you guys have an interesting pair with the CAD, let me know in the comment section. I personally am waiting it out. What is super interesting though is going to be the Aussie CPI. I'm expecting this to come in at 1%. So the forecast is 0.7. I'm expecting 1%. If you look at the last week and we go to filter, none, only the Aussie, all impacts apply. There was the Melbourne Institute inflation gauge. Look at the actual number, 1%. This number is a great precursor to the CPI. So this gauge is a leading indicator to the CPI. That is why I'm expecting the CPI to come in at around 1%. So let me put my filters back. None, red, apply. If this comes in at 1%, we should get almost a definite rate hike from the RBA, Central Bank of Australia, which is then bullish for the currency. One thing that I would love to see, and I'm sure Nick is gonna bring it to the Edge Finder because I've talked to him about it, and it's something that a lot of big tools that the big banks use, like Bloomberg, they have it displayed, and that would be rate expectations. So I think that's a great idea. I know Nick loves it as well, so you can expect that to possibly become a feature. That's basically, you have all of the central banks listed, so you have like all of the currencies listed, and you have the next central bank event, and then you have the forecast, what's going to happen, and what is priced in. So for example, this tool would enable you to see for the Aussie, I think at the moment, there's around a 60% chance that we get a rate hike on the next meeting. Well, if CPI comes out hotter than expected, comes to 1%, that percentage will move to, let's say, 90%, maybe even 99% chance of a rate hike. That should make the Aussie dollar reprice, and it should make the Aussie dollar explode higher. And it's already exploding. I mean, this is a pretty clean move. If you manage to get in late Friday, then this would have been a pretty awesome position. What is worrying me at the moment, as I told you, is this swing high, but looks like we have just cleared it, and we are continuing to go higher. So this sort of went parabolic, following the interest rate differentials. If you look at the interest rate differentials, that is the differential between the bond yield in the US, the 10-year bond yield in the US, and the one in Australia. You would notice that the bond yields have recently exploded higher, while the price hasn't really followed. So now the price is actually following the yield differentials. I don't have those differentials here, but it would basically be comparing the US 10-year. Is it called the AU 10-year? Let me take a look. Yep, AU 10 years. So maybe we can do something like this, AU 10-year. Maybe. Well, I'm not really sure how to structure that on TradingView, but something, you need to do some sort of a function. Maybe there's a minus function. Yeah, not sure. Anyway, you're looking at a differential between how the 10-year is moving from the US and the 10-year in Australia. So let's see the comments. NZD Swiss, what are the Swiss pairs doing? Swiss pairs, pretty much, Swiss has been kind of weak all over the place. So if we go to USD CHF, just you had, sorry, the Swiss has been kind of strong, sorry. Swiss has been kind of strong across the map. So dollar Swiss dropping, JPY, let's take a look at that. This thing has been going higher, which is interesting. And then you have CAD, CHF, for example, dropping. So the Swiss definitely gaining value across the map. I do like the trade idea that Talon has, which is on dollar Swiss. It would be strange. It would be strange to see dollar Swiss go lower than this level right here. So lower than, let's say, 1.715. I don't think that is going to happen. If it does happen, I think the Swiss central bank will jump in. They would do some interventions and try to push the price back above, because they don't want a strong Swiss franc. Strong Swiss franc is a massive problem for exports. So for example, Rolex watches, while the States, I think United States is the biggest buyer of luxury goods out of Switzerland. Maybe China is number two, but the US should be number one. If dollar Swiss keeps dropping, those luxury goods become super expensive, and then that's a problem for the Swiss. So I don't have any trade ideas at the moment. I can put some alerts in at, let's say, 0.3 if we get there, and then we can try to go long. One thing that I like, again, is the positive swaps. So if you go to the carry trade scanner and you put in USD CHF, that's a definite buy direction. Divergence is huge, so the swaps that you get, the swaps are pretty good. And also, if we look at real yield history, no, it's the Eco Strength Index, I believe. Yeah, so let's check out the real yield. Real yield, by the way, is the interest rate minus the CPI. For the US, the real yield is positive, but I'm not sure why I don't have the number displayed here. Okay, 1.05. For the Swiss, it is minus 0.1%. So that's the real yield differential, if you're wondering. And that's also what counts. That's actually the most important yield, the real yield. So the interest rate minus the CPI, basically minus the inflation. UJ, I'm in it and also want to add to my UJ. So Sluggy is in UJ. Interesting. For UJ, I'm also indecisive. As I mentioned, pretty tricky. What will happen here? Will the BOJ commit more? Will they intervene more? Looks like the price keeps dropping lower. So the UJ keeps on dropping lower. I think the edge here is done. So the main edge was selling the top, betting on a 3 to 4% move. That happened. So now it's kind of 50-50 game. What is interesting about this? There's very little buyers. So very, very little buyers. And UJ just keeps on dropping without much support. Let me see the JXY exploding higher. Of course, because it's mostly connected with USD JPY. DXY suffering, so breaking lower, and that has been going on for most of the week. Trump wants a weak dollar. The world is sell America now. Money flow out of USD to metals. Countries are looking outside of USA. Yes, Trump did mention that he wants a weaker dollar. So that is definitely happening. What is happening with the oil prices? He also wanted lower oil prices, which he succeeded as well. If you look at when he took office, 15th of Jan, definite crash in oil prices by, let's say, 20%. That's pretty good. And the DXY, great work with the DXY if that was his goal, and he mentioned it was. So the DXY crashed when Trump took office, 11.6%. Pretty good job with that. Is it good for the US? I'm not sure. I'm not an expert in like a huge macro picture for a whole country. I mean, the main idea behind it is you want to lower the price of your currency to make your exports less expensive. You know, make US exports less expensive. But again, if you look at Europe, like the US builds a lot of cars, but Europeans, we don't really like US cars. I mean, they're kind of shit. So I'm just not sure what are all of the exports that the US could put out to, let's say, the EU, where we would be super interested to buy them. I'm just looking at cars because I love cars. I'm sure there's something out there, but for cars, US cars, I'm sorry guys in the US cars are crap. Okay. Hey Marco, you're still doing the DNA funded account giveaway? Not today. I kind of ran out of codes, but we have more codes coming. So make sure you guys join the streams in the upcoming days, because once the codes arrive, it's going to be a giveaway galore. I think we're going to get 10 to 20 codes. So it should be pretty fun. Mark, when did you close your Aussie dollar long? You're right. I had an Aussie dollar long and I did close it prematurely. I mean, I had a good reason to close it, but if I held it, would have been a great story. I closed my long on the 12th of Jan at 0.67196. So that was the level when I closed my long. And then the explosion happened. Part of the game. You can't sort of stay out of these sort of scenarios. USD CAD, please. USD CAD. Sure. Okay. USD CAD. Let's take a look. USD CAD. So as far as the USD CAD goes, I don't have a clear opinion on it. Canada keeps going from bullish to bearish, bullish, bearish. Short-term stuff, mostly bullish. I mean, not really, but more numbers bullish than bearish. Then we can look at some long-term data. For example, we could look at the GDP in Canada. So this is what I like to do as well. GDP negative, which is not good. I mean, from positive to negative. Then you look at the CPI, so you look at inflation in Canada. I think that's not an issue. I think inflation is not bad. Yeah, inflation is not that bad. But the labor market, they have had some issues with the labor market. Canada had a pretty high unemployment rate. Yeah, back to 6.8%. The last print was 6.5. We're back to 6.8. Not something that you want to see. You know, if you look at the unemployment rate of Canada relative to all of the other countries, Canada is not doing so well. So I don't really want to play the dollar CAD. If we look at the top setups, what score does USD CAD get? Neutral. I'm neutral as well. So not my favorite thing. My favorite currency at the moment is the Aussie dollar. US consumer confidence just flopped. Let's take a look. So Forex Factory calendar, it should be under, if we go to, let's do all, let's do none, let's do only the US, apply. And we have the consumer confidence, yeah, definitely lower than the forecast. And that should be bad for the dollar. See, usual effect, actual greater than the forecast is good for the currency. So that's an interesting number. Although personally, it's not something I heavily look at. I'm absolutely focusing on the Fed event tomorrow. So make sure you guys tune in for that, because we will be streaming here on the Trader Nick channel tomorrow for the whole event. Usually Nick watches the whole event, puts the big screen here, shares the screen, and then he comments on the event after the event passes. Joshua, hello, welcome to the stream. I know I'm a bit late with reading the comments, but sorry about that. There's just so many comments. Are you still trading dollar Swiss? Nope, I'm not. Dollar Swiss, we broke my key level. I'm no longer interested in it. You know, we smashed, we didn't break it, we smashed through my level. So we just smashed through it, continued lower. This is now absolutely done as far as my position goes. So we can remove that, lock it, hide it. I don't want to see it. And then I'm looking at the next level alongside with Alan. We're looking at 0.72, possible buy limit there. If we crash a bit lower, that level could get defended, and that could be a nice grab to go long. Okay, GBP CAD shorted today. GBP CAD so sluggy. A minute with Max. Let's take a look. GBP CAD. GBP CAD. Daily. The UK, the GBP is a pretty weak currency, so GBP CAD. Let's take a look. Bullish reading right there. So did you? Okay, you guys sold. My plan personally, I don't want to go against the edge finder, but again, that's just my style. What you guys could be betting on is selling the top of this range. Could be a nice trade. For me personally, edge finder is bullish, but the UK, in my opinion, is in more trouble than Canada. So the UK, just from my research and reading, is not a good currency to buy. If you want to do that sort of confluence and maybe sell the top of this range, could be a nice trade behind it. Trump is speaking today. Okay, that's interesting. Swiss is at all-time high. SXY. Swiss franc currency index. That's a funny name. Okay, I've never looked at this index. Yeah, this looks super bullish. So the Swiss franc, loving the risk-off environment. That's what I can deduce, because gold is flying and the Swiss franc is a risk-off currency. So this thing is flying. Not such a great story for the Swiss central bank. Again, they don't want such a strong Swiss. Hopefully we get some interventions, because that could be great for us traders. We love volatility. We love movement. It's the best way to make money. Looks maxing. What time frame do you trade? I focus on the daily chart. I mostly look at the daily chart. Marco, don't you think there are better pairs to long USD with? I wouldn't long USD at the moment, of course, but I just love the dollar Swiss because I think this level is going to get heavily defended. I personally believe this level is going to get heavily defended, and you get the positive swaps. So even if you get stuck in the position for a few weeks or months, you get those juicy positive swaps, which I always love. I'm a sucker for positive swaps, even if maybe there are better opportunities out there as far as trends go. I agree, USA cars are shit. German cars are better. Mopar or no car. European streets can't handle our Tahoes and Escalades. That's true. It's super. The streets in Europe are super narrow. Robhola, I bought a used 4 Series from 2015, and that's just because I love BMWs. It's a kind of an unreliable car. I mean, you have to invest a lot to keep it running, but I love BMWs, so I couldn't help myself. So far, it's serving me okay. I didn't have any issues so far. Okay, now we're just talking about cars, but let's do one more chart request before I wrap up the stream. Yeah, I'm starting to read the comments like 20 minutes with a 20-minute delay, so I'm sorry about that. What is your view on the NAS? Sure, on the NAS. So I do like the story with the NASDAQ because it's mostly connected with artificial intelligence. I know lately artificial intelligence has had a bad rep. If you look at NVIDIA, it's flat for months. If you look at Palantir, it's flat for months. So AI story getting a bit stale, but if we can break out into all-time highs, I think we should get a bit of a rally. So I think we should get a bit of a rally. I will try to participate in it. I do like the Nikkei as the best index at the moment. But if the NAS breaks into the all-time highs and we get an edge finder confirmation, I think that could be a good way to go. By the way, just a quick plug, because I forgot to do it. If you want to get the Edge Finder, or if you want to join the A1 Trading Discord and get all of my trade signals, you can do so by clicking the link in the description and using my code Marco to get, I think we have 40% off this month. So a massive, massive discount. Check it out. All of the links are in the description. Also, if you want to get funded, expand your trading capital, A1 Live gets you 25% off any DNA funded challenge. Okay, so A1 Live. This is the DNA fund website. I usually go with the two-phase, 25K, 50K, 100K. In my opinion, those are the best sizes. Two-phase, in my opinion, also gives you the best trading conditions, and you get 25% off from these prices. So you get a very, very good price. To finish up, NASDAQ looking for all-time highs and for the Edge Finder confirmation, then I'll be very happy to get in. What I'm afraid of is that we get stuck in the range and that we go nowhere because of the sell America narrative. So I don't want to get in too early. I don't want to get stuck in the range. I would suggest waiting for those all-time highs to happen, and then we can try to get in on some trades. Of course, if you're interested in my positions or my views, you can join the A1 Trading Discord, where I post everything that's in my head. So thank you very much for watching. You can catch me tomorrow. Remember, we have the Fed meeting. Good luck with your trading, and I will see you in the next video. That's it. See you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.